Good evening, ladies and gentlemen. Today we're going to be reviewing Activision's and Pinterest's earnings along with their charts to give you the bull and the bear case, along with going over three companies that were requested by you guys: Netflix, Pitney Bowes, and JRSH Holdings. So without further ado, let's get into the video. All right, we're going to start off with Pinterest first. The reported earnings was 29 cents with the expectation of 29 cents. The reported revenue was $877.2 million with the expected revenue of $884.6 million. So that's $7 million miss on revenue, which could possibly explain this next piece on the charts. On the run up to earnings, Pinterest had a massive gap up, and now we are slowly filling the gap afterwards, coming back down, basically retesting this area of consolidation that we had before. So now let's quickly go over the bear and bull case. You had a slight miss on earnings. However, you are in a consolidation period for the stock, and then you pushed up out of it due to the market's movement. So it's not necessarily Pinterest's itself moving, but it's just following the market. I would expect to see a retest of the 50 daily moving average and a bounce there. That would be a bullish sign. Now, some of the bearish signs that are forming on the stock is that you are below the 200 weekly, which is sitting currently right at $36.79. So that area is a key level of support for long-term bullishness in the stock. However, we do have to discuss this big run up that Pinterest had, where it had this astronomical 2020 to 2021 run where it just went absolute parabolic. So that is going to affect your 200 weekly moving average significantly. And then Pinterest spent a lot of time below this 50 daily moving average as it came down back to reality, as I would call it, basically reforming the price zone prior to 2020. So now you're continuing almost in an upward channel, which is bullish for the stock. If we draw the channel here, so you have more upside potential and you also have downside potential. But however, I do expect Pinterest to almost trade going up, down, up, down, up, down, which could be an interesting swing trade. For long-term investing, I wouldn't necessarily pick Pinterest as a buy and hold company. One, because it doesn't pay a dividend, so there's no incentive for you to hold a company that doesn't necessarily move a lot. Or if you're buying and selling, it could be an interesting swing trade opportunity. But I feel like there's better companies to put your money into for long-term growth. Because Pinterest had that massive bubble, it kind of puts me off to investing into it, because a lot of people have what I call bags up there, where they're going to be holding this company for many, many years and possibly never recuperating their money. And as you advance to those higher price levels, you're going to be having people sell, and it's going to struggle to advance as it goes further. On top of any company that has a devaluation of 60% from all-time highs is basically a red flag for me that I don't invest. However, to each their own. Now let's take a quick look at what algo is telling us. So kind of what I expected to see: a very bearish intonation on the stock. Since you have that massive bubble, everything you trade above now is forming this bearish cloud. However, you are starting to trade above it, so you could work your way off the bearishness of the company. Your MACD is crossed bullish right now. However, if you start filling this gap, I definitely would see this crossing back bearish. Your RSI is on the bullish side. However, you haven't actually crossed over completely. So there is potential for this company to retest the area of 25.66 and 23.28. And if we look at where that coincides on our chart, $25 range is right around the 50 moving average, and then $23 range is around the 50. So two different price zones that I would be maybe looking to pick up Pinterest if I was going to invest in the company. Full disclaimer, I don't view this company as a good value, but then again, everyone has their own risk management. With this company, I would definitely give it a pass. I do believe in overall that it has the potential to go higher, but it hasn't proven that yet, especially with mass sell-off. It'd be a slow roll to the upside, and I do believe there's better companies to put your money. Next, we're going to cover Activision Blizzard. Activision Blizzard had a reported revenue of 0.78 with an expectation of 1.53. That's nearly a 50% miss on EPS. However, we don't necessarily go by EPS. We have to look at the revenue. The reported revenue was 2.33 billion and the estimated revenue was 3.17 billion. So that is a significant miss on revenue. And as we can see on the chart, it just sold off like no tomorrow. First of all, I don't believe there's a bull case right here in the short term for the company. You had basically a top to bottom 6.53% sell off in just one day, leaving a huge gap. So there was some people trying to get out prior to earnings in this relocation right here. And now you just kept selling off. This could waterfall down if you break below $70.89, where there's not any price action to support you, all the way down to the level of $65.37. This is a massive gap right here from the previous earnings. And then you have another gap right here from the earnings before that. So it will definitely fill in this area here with little to no price action. So for it to waterfall down this level is very easy. You break the swing point here, and let's just take a look if we have any harmonics. So A to B, B to C, to swing point high. If you break swing point low, price target of $67.50. And in my opinion, once you break that, complete the harmonic, you're probably coming down to 65.31. With the momentum that's here, I do believe you're going to see lower prices on Blizzard, along with possibly having a zone right here off the previous earnings at $64. So it could be an interesting pickup there. As of now, it's more of get out while the getting's good. Then if we go to a long-term chart just to see how the stock was trading, it moves very up and down through cyclical nature. So you could see more push down. You don't have a lot of volume. You had a big volume rally previously at this low, so there may be some people trying to pick it up there. It would be an interesting buy there. However, like we talked about in Monday video, that once you get below the 200 weekly moving average, it's basically a non-bullish company, and you have to look at supply zones and demand zones to identify areas to buy, but it's still high risk there. Personally, I would like to get back above the 200 weekly moving average to turn fully bullish on the company, but I do believe that there is a long period of time that's coming for Blizzard. There's been a lot of talks about Microsoft acquiring them, and they haven't necessarily completed the merger and all this. So there's a lot of controversy around the company, and if this zone doesn't hold, that was the pump off earnings, and you break below swing point of $56.49, there is not a lot of saving grace until you get down into the 45s. And just to put that into perspective, if you come down to the first one I was talking about, that's a $9 haircut. Let's say you come down to here, that's $26 haircut. And if you come down here, it's 41.54% haircut. So definitely something to be cautious about. Now let's quickly take a look at what Lux Algo is saying for Activision. So right now you are in a reversal zone with another zone right here that was formed off the daily. So definitely something to be looking out for a potential bounce here. It doesn't necessarily have to mean that. You have the MACD crossed bearish, RSI heading to oversold possibly. I don't think the bleeding is going to stop here. I think you're going to break this zone and possibly heading lower. Like we said, once you head lower, price target for the weekly reversal, $61.64, is definitely where I'd be picking up Blizzard, because that would be a sharp move down. Usually those reverse. However, I would be holding a very tight stop loss there. If this swing point doesn't hold, then like we mentioned, $51.40 off this previous zone right here would be my next point that I'd be looking to pick it up. However, time would have to tell. I personally don't like trading companies below the 200 weekly moving average because it is a significant bearish sign. Whenever trading companies like this, it's always high risk, high reward. Having tight stop losses is definitely the way to go with this, and looking for demand zone opportunities rather than trying to trade short-term patterns. Next, we're going to go to viewer requested tickers. So first of all, we're going to start off with Tony's comment of PBI and JRSH. So first with PBI on the daily chart, you have a nice uptrend. You could be meeting resistance around the $4.83 area. You recently had your MACD cross bullish over. You had a divergence complete on the oscillation. However, RSI is still failing to get above the 50% zone where you start crossing from bearish to bullish. So it is a little concerning that this MACD may actually cross back over. You're below the trend catcher, possibly heading into support around the $3.60 range. It could be an interesting buy at that point, or if you manage to continue higher, I'd definitely be looking to take profits at $4.84. If we look at the weekly chart, it is pretty bearish overall. This company had a massive run down from all-time highs. You're definitely looking at something that's pretty staunchly bearish. I wouldn't look for long-term investing in this company, especially being so low, down below $5. It's very easily to manipulate companies like this, where hedge funds and big money could easily swing it one way or another. These companies are notoriously noted for naked short selling, where they're being like GME and all this, and I don't recommend trying to invest in those type of companies. The other thing, if we look here, the weekly MACD is crossing over bearish, RSI is overbought for historical timeframes. So I do believe there's more downside that this company rather than upside. It's been a long-term downtrend. Personally, I would avoid this if I was looking for a short-term swing. Maybe pick it up at the $3.58 level, but there's no guarantee of where you push up from there. If you are in it, I would then probably be taking profits at $4.84, or even now, because there's not a lot of momentum to hold this area right here. Next, we're going to go over to JRSH. So looking at JRSH, you have potential here for a nice squeeze. And I say that because your MACD is pretty diverged from one another, bullish. Your RSI has been going up, so that's bullish. You have this zone right here that you're slowly whittling away at it. You are having 1, 2, 3, 4 wicked candles there, so you're breaking that zone. You're actually over the trend catcher, so it definitely would be an interesting proposition if you get above $4.61, because you're going to be basically flooding through this price development area. Next stop, probably $5.24. So it could be an interesting proposition. If I were to trade this personally, I would put my buy order right here at $4.61, and then a stop loss order at $4.48 to then, if we pierce back above it, break down and then continue higher. I may get stopped out of it, but I would play the risk to reward, probably keeping a tight loss. However, I wouldn't be looking long term for this company. Similar to how we just talked about PBI, that you're in a massive downtrend. So simply looking at this, you're kind of heading towards that downtrend, and you could get rejected there. That's why I say to be cautious. If you're able to get above that $4.60 level where this downtrend kind of meets, I'd definitely be looking to see a nice squeeze out of it or a run up. Personally, I don't like investing in companies that have such a low evaluation along with such a bearish trend in the stock. For an interesting swing trade opportunity, I definitely see the potential. Next, we're going to go to Netflix. So Netflix was requested by Thomas Raddick. So we did do a recent earnings video on Netflix. However, I do like to retouch upon Netflix because it is an interesting stock in the developments after earnings. So with Netflix, you kind of are a little overextended on your moving average, this 50 EMA for the day. And I would like to see a retest of that zone. It'd be quite fascinating to when you get there. However, you are in a steep uptrend where you are forming this uptrend right here off of earnings, and I would like to see the retest of this company's trend right here before I would necessarily buy. I want to see that trend hold and push up higher, because then the retest of this 50 could be coming at a significantly later time. I'd be interested to ride this up to the area of $385.34, or even if we break past the $390 area, the 406, which is our 200 weekly moving average. Like I've talked before, that is a very strong resistance. I don't necessarily see Netflix breaking through it. However, you could build up steam going into next earnings in mid-April for that. So it could be an interesting trade there. If I'm looking to get in for short-term bullishness, I'd definitely be looking at this uptrend here to possibly pick it up if you break the trend, because remember, trend is your friend till the end. And then I'd be looking for the 50 daily moving average retest. And now let's take a look what Lux Algo is telling us. If we look at the daily chart for Netflix, you did hit that reversal zone. However, I've seen companies kind of trade hugging that reversal zone very tightly. You are still on the bullish side for the RSI. MACD is bearish, but you did have this pullback. So there is potential for Netflix to curl back up into a bullish uptrend again, probably targeting that region of 400, like I mentioned before, where your 200 weekly moving average is. So there's definitely potential there. I would like to see Netflix retest that upward trajectory trend line first, have a nice pullback, probably consolidate around this region, about 355. I would say for Netflix, that would be forming lower lows and higher highs. And then you could see upward movement to that 400 region to possibly have a rejection there, or maybe you break it. You really have to see what the charts are telling you as you get up there. So with that, guys, thank you for tuning in today. If you guys could kindly throw any comments down below of any ticker recommendations you have. We like doing these ticker recommendations. I try to get them as soon as possible, along with like, comment, and subscribe. For more, we do weekly update videos along with fundamental analysis on stocks. And with that, I bid you fair due.